Welcome to another episode. My name's Jose Najarro, and today is finally the day where we get to see which is the best video game company out there. In the past few days, I've been taking a look at ATVI, EA Games, and TTW. I posted videos on them so you can see them in my previous episodes, but today we are going to compare all three and see which is the best. Like always, I have my buddies Bull Solo and Darth Bear ready to keep track of the companies. So let's get started. So all the information that I have taken has been from the investors website of the selected company. I've also used Seeking Alpha to collect analysis and earnings transcript. I've also used this amazing website known as lazyfa.com to look at some information, which we're going to see in a bit. All right, so the first thing we are going to take a look at earnings for these three big companies. So all of these companies are well known, right? We know Activision for Blizzard, World of Warcraft, Call of Duty, EA Games from all their EA Sports, TTW, we know them from Grand Theft Auto and Red Dead Redemption. So all these companies have some big known names. So earnings per share for ATVI was 38 cents and net bookings of $1.2 billion. So remember, net bookings are just items that were actually sold this quarter alone. Revenue was $1.396 billion, and that's just net bookings plus some deferred revenue that they collected. Earnings per share for EA Games were 25 cents, net bookings of 743, almost half of the net bookings Activision collected. Revenue was $1.2 billion. We can see the revenue was a lot closer to Activision, but that net bookings difference makes a huge difference for when you're looking at companies like this. TTWO's net booking was $422 million with revenue of $540 million. So right off the case, we are going to give a point to Activision first. So the first reason is net booking is so much higher than all three companies, right? Net bookings $1.2 billion. The next in line was EA Games with $743 million. But revenue was also bigger compared to the O3. So ATVI takes the first point. Next, we're going to take a look at net bookings and how they have done quarter to quarter. So in the previous slide, we saw how net bookings are related to each other. Now we're going to take a look at net bookings when we're taking a look at past quarters. So ATVI had net bookings this quarter of $1.2 billion, $1.21 billion, right? That's what we said, $1.21 billion. Same time last year, it had $1.385 billion of revenue. So there was a decrease of $178 million, same time last quarter. EA Games had $743 million of net bookings. Same time last quarter had $749 million. Again, that's pretty flat. It decreased by $6 million, but in reality, that's a pretty flat number. It's not a decrease like Activision. TTWO this quarter had $422 million of net booking, when same time last year had $288 million. So TTWO is going to be the one to take the point here because it was the only one that did have an increase in net bookings. Next, we're going to take a look at the company's future plans. For this, there's not going to be a point given out because all these companies have a plan for the future, right? I can't really determine which would make the best sense because that to me would mean I can look into the future. But as long as they have a plan, then I think that's definitely a good thing. So all these companies are doing that. Activision is still remaining the industry leader in esports, and they're gaining traction with Call of Duty by doing more teams. They are also only focusing on their main brands, and that's pretty, I don't know if that's a smart thing, right? It's something we have to see in the future, but they're putting all their focus in all their main brands, World of Warcraft, Call of Duty, Kings, Candy Crush, and stuff like that. They're also trying to increase mobile presence for them. They are coming out with Call of Duty Mobile. EA Games and TTWO are also trying to do that by increasing their mobile presence. EA is trying to also increase esports with this new Apex game and is trying to bring Apex to China and bring out a mobile version worldwide. They also want to continue to grow content on top portfolios like their mobile games and Sims 4, which is one of their best games out there in their portfolio. TTWO again is trying to increase mobile presence also on free-to-play, streaming, and subscription-based revenue. So we can see TTWO is a little bit behind the game, but it's a smaller company to these guys. So it free to play, streaming, and subscription based is something Activision and EA Games already have. And this is something TTW is trying to get in line with. They are also trying to get increase in esports, but to me, their only big game right now that it's able to really make it in the esport presence would be the NBA 2K games. So all these, right, all three companies have a nice future plan, and they're all trying to continue their growth, which is a great thing to have. Next, I just want to show the overall game portfolio just so people know what type of games each company has. So Activision, like I mentioned, is only focusing on their main games. Call of Duty, Hearthstone, Overwatch, World of Warcraft, and Candy Crush. They also have Crash Bandicoot. EA Games has Sims 4, FIFA, Battlefield, NBA, Star Wars games, UFCs, and they also have ton of these in the mobile games. Then we have TTWO, who has some of the big games like Grand Theft Auto, Red Dead, NBA 2K, Civilization, World Life, Borderlands, and WWE. So again, these are not points-based. Right here, I'm just trying to show you guys that each of these companies are pretty good at what they're doing. They all have future plans, and they all have a strong gaming portfolio. If I was to say EA Games probably has the most diverse, so does TTWO. But ATVI has the strongest. Activision has the strongest brands of them all. So now we're going to take a look at release portfolio. Now this is something I can categorize, right? This is something that we get to see how many games a company is releasing. So Activision, they say they want to release Call of Duty mobile, which is doing a soft launch in Canada and Australia soon. October 25th, they want to re-release Modern Warfare Call of Duty. They are releasing World of Warcraft on August 27th. Overwatch, they're trying to do new content. Warcraft 3, they're trying to reforge. They're trying to remake later this year. EA Games for quarter 2 and quarter 3 have the following games. They have no games for quarter 4. They have FIFA, Madden, NHL, Sea of Solitude, NBA, Need for Speed, Plants vs. Zombie, and Star Wars Fallen Jedi. So if we see this compared to ATVI, we see that EA Games definitely has a bigger portfolio coming out this year, which again is a great thing. We're going to see why EA gets this point here. TTW also has a huge list of names if you take a look at this list. But they do a lot of renaming of the gifts of the game. So right here, the second in line is NBA 2K20. So in September 6, 2019, they're releasing it to PS4, Xbox One, Switch, and PC. But if we take a look again in the November 2019, they re-put NBA 2K20, but that's just because they're going to release it with Google Stadia, not sure how it's pronounced, but their Google platform. So we can see, right, some of these games like Borderlands 3 is again re-mentioned twice, once for console and then once for Google's platform. So TTWO does have a decent gaming release upcoming these past few quarters, but we can see EA Game is definitely the strongest of three. Next, let's take a look at shareholder return. Activision at this moment has $1.5 billion to repurchase. It hasn't spent anything so far. It also returns about $250 million a year in dividends. EA Games has 979 million to repurchase and has 1.2 billion bought back in the last 12 months. It has no dividends. TTWO has no buyback program and no dividends at all. So here, even though EA Games has the most value in the past 12 months, right? If you do 1.2 plus the 1 billion they have left, that's $2.2 billion that they've returned to the shareholder. ATVI, on the other hand, has 1.5 to repurchase and 250 million a year from dividends. But if you take a look in the long term, that dividends is continue to go, and it has provided dividends in the past. So obviously, in the long run, ATVI has the highest shareholder return, and it's something I think is better in the long term when you have dividends opposed to just repurchase buyback shares. So ATVI takes this one. Next, we're going to take a look at debt. So Activision has $2.7 billion in debt. EA Games has $1 billion in debt, and TTWO has a small $125 million in debt. So it's nowhere near where these other giants sit at. So obviously we can't really just compare based on debt. We want to also take a look at when this debt is due and how much cash and cash equivalents this company has. So I'm only want to take a look at debt that's due between now and 2025 because that's such a long time from now. So Activision has $650 million due in 2021 and $400 million due in 2022. So they have about $1 billion due in the next 5 years. EA Games only has 600 million due in 2021 and they have 400 million due in 2026. So EA Game is again pretty out of that 1 billion, they only have 600 million to pay in the next 5 years. Activision has 1 million to pay this year and 1.7 to pay between 2026 to 2027, and they even have senior notes for 2047. That is pretty impressive. But now let's take a look at how much cash and cash equivalents the company has. So here I'm taking a look at quick cash. So this is cash and cash equivalents and current investments. So ATVI has $4.6 billion. If we take a look at the $1 billion it has to pay in the next 5 years, this would mean that ATVI has about $3.6 billion of quick cash. EA Games, in the other hand, has 600 million due right now in the next 5 years, and they have $5.2 billion in cash and cash equivalents. So that would mean they have somewhere about $4.5 billion in cash. So again, that's more than Activision. But then I'm gonna give the point to TTW because look, it has $125 million in debt, and that's it, and that's just on leases. And it has $2.16 billion in cash and cash equivalents. So if we take a look at ratios, TTW definitely has the win here. This is actually one of my favorite things about TTW, and it's that debt that it has, almost flatline, zero debt. Next, we're going to take a look at assets. So here in assets, I'm going to take a look at different things. So first, I took a look at their total assets. Then I took a look at their intangibles. I said something that was called true total assets, and that's total assets minus intangibles. Then I took a look at total liabilities. I subtracted that by the deferred revenue, which is also a form of liabilities, to really give me the true total liabilities. And then I took a look at shareholder equity to a true shareholder equity, which I consider true total assets minus true total liabilities. So if we start off just from total assets, we're going to see Activision has the highest assets at $17.5 billion, and EA Games is next in line with $9.75 billion. That's about $7.5 billion less than Activision. TTWO has total assets of 4.24. But now if we look deeper in the assets, ATVI has about 10.67 billion in intangible assets, while EA Games only has about 2 billion and TTWL has only about 1 billion. So if I subtract the two, the true total assets is different. EA Game wins it here. True total assets for Activision is 6.83 billion. True total assets for EA Games is 7.78 billion, and true total assets for TTW is 3.13 billion. So right, we can see off the bat, the two top dogs here are definitely Activision and EA Games. TTWO is a smaller company, but it's a smaller company doing things correctly. Now, if we take a look at total liabilities, so total liabilities for ATVI is $5.52 billion. Total liabilities for EA Games is 3.26, and for TTW is 2.28 billion. Deferred revenue, right? This is revenue the company has yet to deliver the product, but they have already collected the revenue. So in the point, it does go into the liability section. But this eventually will come to the income statement. So that is one reason I don't really consider it a true liability. So I'm subtracting it. Activision has 728 million of deferred revenue. EA Games has 679 billion of deferred revenue, and TTWO has a nice $850 million of deferred revenue. If we take a look at the true total liabilities, Activision still has the highest with 4.79. EA Games has 2.55 billion, and TTWO is actually pretty high as well at 1.43 total liabilities. So now if we took a look at the true shareholder equity, the whole thing shifts, right? So now the true shareholder equity, EA Games has the highest. It has a $5.23 billion of shareholder equity, where Activision has 2.04 billion, and TTWO is actually not too far behind from ATVI with 1.7 billion dollars of shareholder equity. So here, EA Games definitely takes this point. Next, we're going to take a look at full year guidance, and full year guidance, we can see why Activision is the truck it is. Look at the revenue collected. This year is going to collect about $6.33 billion of revenue. EA Games is going to collect 5.2, and TTWO is way behind at 2.7 billion. Net bookings isn't much different. ATVI says net bookings will be close to its total revenue of 6.3 billion. Net bookings for EA is again going to be similar to its revenue at 5.1 billion. Net bookings for TTWO is going to be somewhere between 860 million to 910 million dollars. So right off the bat, Activision is going to take the case here because it is a tank. It has the highest revenue collected and it's going to have the highest net bookings collected. So before here, I want to take a look at the future, at some other items for the company. So give me 1 second. All right, guys, so here we are on this amazing website known as lazyfa.com, which allows me to see any important information of the company. So here I'm taking a look at all three companies, and the blue is research and development cost, and the gray are the total operating expenses. So here we can see the operating expenses for ATVI and EA Games are usually pretty similar. Sometimes ATVI has higher operating expense, other times EA Games has higher operating expense. So right now this quarter, EA and ATVI had a close to $600 to $620 million of operating expense. TTWO, as we can see, is a smaller company and it has a total expense of $250 million. But now I want to take a look at this research and development. So this is how much the companies are focusing to, again, produce newer games or to produce better content. And we can see right off the bat, EA Games seems to always use more of its money on research and development purposes. And to me, that's always a good thing if a company is trying to always continue to improve themselves. And that's where we see this research and development. And here we can see EA Games has $381 million spent in research development this quarter, where Activision only had $244 million. So that extra $100 million is being used to continue to develop games, to develop more games, or to continue to develop better content. TTWO is really low behind at $68 million spent on research and development. So here, right, I'm gonna give EA Games the point here because they are definitely focused in growing the company even further. Next, let's take a look at net cash flow from operations. So the first thing I want to see is net income and net cash flow from operations. So net income, Activision always seems to be higher net income than the rest. But one thing to my surprise is net cash flow from operations is pretty similar for all three companies in the past 3 quarters. So even though TTWO is a lot smaller company, it's not far behind. Let's take a look at this quarter. This quarter, ATVI had 154 cash flow from operations, when EA Games had 158. TTWO wasn't far behind at $108 million. Here, I definitely would like to give a point to TTWO because it is pretty impressive that they are not collecting the same amount of revenue as these other big companies, but at the same time, they are producing similar cash flow results from operation. So they definitely know how to manage their money a lot better than these other companies. So for that, TTWO is going to get a point here. Next, we're going to take a look at profit margins and gross margins. We can see gross margins for these companies, ATVI and ATVI and EA Games usually go back to back when it comes to gross margins. EA Games seems to have a lot better gross margins, but if we take a look at profit margins, it seems Activision seems to be a little better most of the times compared to EA Games. Again, TTWO has pretty low profit margins compared to the other companies. Let's take a look at last quarter, because this quarter EA Games had a tax benefit that makes this profit margin jump off the roof. But let's take a look at last quarter. Last quarter, Activision had 24.5% of profit margins, EA Games had 17%, and TTWO had about 10.5%. So Activision does seem to have a better profit margin. So for that reason, Activision gets the point here. So now, which company would I pick to be the top video game company? And actually, they are all really good. So first thing we're gonna see is all these companies are definitely good companies. I personally would feel confident investing in any of these three companies. I definitely think they're undervalued to what their forward PE ratios are, and that's what I'm going to talk about. But I think it depends on the type of investor that would choose each different company. So if I was an investor that's really focusing on a growth company, on a company that I can see can return potentially so much higher returns, then I would invest in TTWO. We can see TTWO is the smallest of the three, but it had the only one that was producing higher net bookings compared to last quarter. It had the one with the smallest debt ratio. It definitely wasn't buying back shares, and it was paying no dividends because it has no money to do that. But TTWO would be the company I would buy if I was an investor that was focusing on a growing video game company. Activision, on the other hand, is if I was focused on buying a true video game company that was stable and was paying a nice amount of dividends, right? ATVI definitely still had a very nice shareholder equity. It paid back, it had a nice shareholder returns with its buyback program, and it has the dividends return. It also had the strongest revenue of the three. So Activision is definitely the top dog of these if you're looking for like a nice stable blue chip video game company. EA Games, on the other hand, I think is the best of both worlds. It's a strong company, definitely a strong company like EA Games we saw with the balance sheet. But I think it also, with that research and development purposes and all the games upcoming, it has so many future upcoming games compared to Activision that EA Games I think would be considered in between these two. So if you don't really just want to invest on a strong company and you want to also invest in a grower, I think EA Games would have that. And based on next year's earnings per share, right now these are the current prices. So Activision has a forward PE at the moment of 18.6%. And we can see, right, 18.6% means that investors are willing to only pay 18.6 compared to the earnings per share of $2.50. EA Games has a forward PE of 22.39 at the moment with a $5.10 earnings per share, and TTWO has a forward PE ratio of 25.49 based on the $5 earnings per share ratio. So here in the forward PE ratio, we can already see exactly what I just mentioned, right? Activision has the smaller PE ratio. And usually if you have a smaller PE ratio, it means that the investors already see that you're a top company and your growth is not as big as smaller companies. But at 18.64 is still pretty high, right? They still believe Activision is going to continue to grow, but they think TTWO, which has a 25.49 forward PE ratio, has a higher chance of growing, and that's why it has a higher PE ratio. So based on everything we saw, I would be okay purchasing the stocks at these values. So I would be okay paying a 20 PE ratio on Activision, which would give Activision a price ratio of $50 based on the $2.50 earnings per share for next year. So that's pretty, right now it's sitting at $45. So this is where I feel okay still buying. It's not when I want to sell. This means that I would feel buying ATVI. I will feel happy buying it anywhere below $50. EA Games, like I mentioned, is a big company, but it still is a big growth. It still has potential to grow at a faster rate than Activision. So I want to give that one a 22.5 PE ratio, which would give this company $114. EA Games right now is sitting at $90, I think. TTWO, I would give the highest PE ratio of 30 PE ratio just because it has the huge potential of growth and it has that low debt. It has that low debt that to me is always a winner. And it has a 30 P. I would be okay giving a 30 PE ratio, and that would give this stock. I would feel okay buying it below the $150. So again, all three companies are very good, and depending on what type of investor you want to be. And honestly, I think I think I might. I like all three. Um, and for me, I'm having a hard time deciding. I definitely think TTWO would be one of my favorite ones to go because it is a growing company. I also like Activision because of the nice stable dividends and the huge revenue it collects. But then EA Games is also pretty good. So for me, I think I would probably just split up evenly, maybe actually by a little more than of TTWO compared to Activision and EA Games. So let me know what you guys thought. Let me know which one you thought was the real winner. Do you really think what I think, that all three video game companies are okay to invest in? I think all three are undervalued at the moment, and I would feel. Do you feel the same way? Let me know. Post on the comments and tell me what you guys think. Have a good night. See you next time, and take care.